So now we're working in the chapter 2, and I am not on the right chapter. Give me just a second. So in chapter 2, we talk about tax compliance, the IRS, and tax authorities. And as I told you in the introductory video, this is kind of a dry chapter to read. It's kind of hard to read, but very, very, very important. So I'm actually going to try to work through a couple of these and just talk about the terminology. This is problem number 46. And it says that Jamarcus is not required. Oh, that's not the problem. Sorry. Jamarcus is a full-time student. So that's the first piece of information that we need to know. And when you do someone's taxes, you'll have a questionnaire and you'll ask them questions such as that. Are you a student? Are you full-time or part-time? Are you seeking your first degree? Lots of questions like that. And so he earned $2,500 this year from a summer job and had no other income and will have zero federal income tax liability. And it says that his employer, so this is his income, and it says that his employer withheld $300 of federal income tax from his summer pay. And the question is he required to file a return? And the answer is no, he is not required. He doesn't owe tax. He's well below the gross income threshold for a single taxpayer. However, should he file a return? Yes, he should file a return so that he can get back his $300. So, again, pretty straightforward. Number 47, this is interesting. We actually had this happen at VITA this year. We had someone walk in, very similar situation to problem number 47. Said Shane has never filed a tax return despite earning excessive sums of money as a gambler. When does the statute of limitations expire for the years in which Shane has not filed a tax return? And so the situation we had, a taxpayer came in, a client came in and said, I have been earning this money. I'm not going to tell you too many details, but basically was told that it was not taxable. However, it was taxable. And so that was out of our scope, and we sent her to a local CPA so that they could work that out for her, because it didn't appear to be negligence. It appeared that she had bad advice. However, she should have known. And so this one asks about the statute of limitations. This actually remains open indefinitely if you fail to file a return. So if you fail to file a return, the statute of limitations is indefinite. Trying to look at a few more of these. A lot of this is just simply looking at charts and tables in the book. You're going to look at the different levels of authority. And I didn't have you do a lot of research because we don't have a good database for you to do that research in. But I do want to show you some of these. And so, actually, I'm going to look at problem number 72. Because this is also an area that seems to be recently an area of confusion. Matt and Lori were divorced in 2016. And pursuant to the divorce decree, Matt receives $10,000 of alimony each month. And it asks us to use an available tax service to determine if the alimony Matt receives is taxable. Would your answer change if Matt and Lori still live together? So if you look up the code, and you can actually Google this, like I said, we do not have the actual database. It's very expensive even with the educational discount, but you can actually Google and you can find what the IRS section is, and then you can kind of work backwards into that. It's not near as easy as if you have the software and the database, but IRC, Internal Revenue Code, make sure I get that right. IRC section 71A is where this would be found. And it specifically states that alimony is included in gross income. So Matt is going to include that $10,000 a month in his gross income. And then the question says, if Matt and Lori continue to live together, the $10,000 would not meet the definition of alimony under IRC Section 71B. So you have to continue the research. IRC Section 71B, and it goes a little 1C, tells us that if they live together, it is not taxable. Now, the law changed on this with the tax reform, and so starting in 2018, the law changed on alimony, but it's only for divorces after that date. And so what we were seeing at VITA, and other people were asking us, I hear that alimony is no longer taxable. Well, that is true for divorces after the law changed. And so before the law changed, it is still taxable, and it is still a deduction to the person paying it. It's real important, though, what I wanted you to see on this, citing the code. In your research, in your notes, if you're doing any kind of research, you want to make sure that you're citing that and that you have a good source to get that. So that really kind of wanted to do problem number 57 is a pretty good overview of a lot of what we talk about in Chapter 2. It says the IRS recently completed an audit of Shay's tax return and assessed $15,000 in additional tax. Shay requested an appeals conference but was unable to settle the case at the conference. She is contemplating which trial court to choose to hear her case, and so asked us to provide a recommendation based on the following alternative facts. And so if Shay resides in the Second Circuit, and the Second Circuit has recently ruled against the position Shay is litigating, if that is the case, then Shay should choose the U.S. Court of Federal Claims to move the case to the Federal Circuit jurisdiction instead of the Second Circuit. Okay. In B, the Federal Circuit Court of Appeals has recently ruled in favor of Shay's position. If that's the case, she should choose the Federal Circuit. I mean, this makes sense. You just have to look at what are you allowed to choose. So she should move to the Federal Circuit jurisdiction and litigate in the U.S. Court of Federal Claims. In C, and these are all dependent of each other, the issue being litigated involves a question of fact. Shay has a very appealing story to tell, but little favorable case law to support her position, so you immediately think jury. So she may benefit from a jury trial, and her only option then would be the U.S. District Court. And then in D, the issue being litigated is highly technical, and Shay believes strongly in her interpretation of the law. And so if that's the case, she probably wants to have it heard by tax experts, assuming she really does know what she's talking about. And then she should litigate this in the U.S. tax court. And then in E, Shay is a local elected official and would prefer to minimize any local publicity regarding the case. If that's the case, local publicity is likely to be highest in the district court. Thus, Shay should consider the U.S. tax court or the U.S. Court of Federal Claims because we're at the federal level rather than the local level. So the U.S. tax court or the U.S. Court of Federal Claims. So again, those are all pretty straight. The information is very straightforward. It usually isn't that clear in real life, but it's a very good overview of understanding the differences in where you want your case heard. So that pretty much wraps it up for Chapter 2. We're going to move on into Chapter 3. Make sure you are doing your discussion boards and your smart book and your quizzes, and always remember to ask me questions if you are confused about anything. Thank you.